Have you ever felt like you just don't stand a chance? Well, that doesn't sound great, but after this video, that's exactly what will happen. You won't have a chance to go the wrong way in learning scalping. Eugene here. Like, subscribe, let's go! In this video, we'll break down strategies, what you definitely need to pay attention to, and what you don't. Everything said in this video is material that will be useful to you and will help you understand where to move and what to focus on, cutting out all the unnecessary stuff. Let's dive into strategies in scalping. Scalping is a type of trading that involves trading on small time frames, or, in simple terms, collecting short movements by finding entry points on small time frames. 5 minutes, 1 minute, 15 minutes, and no more. On these, we collect short movements, and yes, we can stay in a trade for 5 seconds, or we can stay in a trade for 5 hours, and it will still be scalping. Why? Because we found an entry point on a small time frame from local levels, and that's what scalping is. But we can also scalp very quickly, entered, caught an impulse, and exited. So, to summarize, scalping is trading on small time frames and collecting short movements. As an active trader, you watch the market every day, look for promising setups, and review your trades. That takes a lot of time. That's why we created Takert, your trading co-pilot. It shows you the full market picture, helps you catch the best opportunities, and automatically tracks your trading stats. Takert takes care of most of the routine, so you can focus on what really matters. Sign up using the link in the description. And if you want to master scalping, check out our course, Impulse Hunter. The link's down there too. But before we dive into the strategies, let's talk about the most common mistakes beginners make. First, they trade without a clear strategy, which is exactly what we're about to fix. Second, they hold on to losing trades, and in scalping, that's unacceptable. Scalping requires instant decision-making. You don't hold on to losses, only winners. You let profits run, and you cut losses quickly. That's the rule. There are 3 key factors that will always help you in scalping. First, you need to learn how to read horizontal levels. Most trades still come from them. Breakouts, bounces, everything starts from key levels, so it's essential to understand how they work. Second, you need to pay attention to volume. Volume shows where money is coming into the market. These areas often act as strong support or resistance. Price tends to return to them, and when it does, there's usually a reaction. That's why it's important to understand what's happening on the chart, not just look at it. And third, quick decision-making. Scalping is not for those who hesitate. You can hesitate while you're analyzing a setup, but once you've found a level and decided to trade it, that's it. You should be ready to act with confidence. Only then can scalping really work for you. All right, now let's move on to the actual strategies. Let's start with the first scalping strategy, the level breakout. It's one of the most well-known and reliable methods, and it works when done right. The idea is simple. We look for a horizontal level that the price has touched multiple times. Over time, stop-loss orders from other trados tend to build up just beyond that level, especially those trading rebounds. When price breaks through the level, it often triggers a sharp upward or downward impulse, quick move we aim to capture. In scalping, this usually means entering on the breakout and closing the trade quickly to take profit from the impulse. Alternatively, you can take partial profits and move your stop loss to break even, allowing the rest of the position to run if the price keeps moving. For this strategy to work, there are 4 things you need to master. 1. Learn how to identify strong horizontal levels and understand they're often price zones, not exact lines. 2. Find precise entry points near these levels. 3. Recognize the signs that a breakout is likely, like price pressure building up or failed attempts to bounce. 4. Most importantly, always define your stop loss before entering a trade. If the stop doesn't make sense, skip the setup. Now, a quick note on how levels form. A horizontal level is usually an area where buyers or sellers have previously shown strong activity. It can be a clean line, especially if there's a large limit order sitting in the order book. Or it can be a range, like a cluster of highs or lows. This is often called a cascade, where price forms multiple nearby peaks or bottoms without touching exactly the same point. These cascades often act as support or resistance zones. When a breakout happens, the impulse is created either by a big player entering the market or by the triggering of stop-loss orders placed behind the level. For example, traders expecting a bounce will place stop losses just beyond the level. And when price reaches those stops, they turn into market orders and fuel the breakout. Our goal is to catch that impulse, enter at the breakout, and exit with profit as the move plays out. That's how the breakout strategy works. To trade this kind of breakout, or the next strategy we'll cover, you first need to identify key levels on the chart. That's where our trading co-pilot, Takert, comes in. It automatically scans multiple coins and marks the most relevant support and resistance levels. You simply select the coins you want to trade with levels already identified and execute your setups based on your strategy. The link to Takert is in the description. Let's move on to the second strategy, which naturally follows from the first, the bounce from a level. This setup works when the price comes up to a horizontal level but fails to break through it. Instead of continuing in the same direction, the price reacts and bounces away. That usually means the asset doesn't have enough strength to break the level, and the opposite side steps in, buyers or sellers, to push it back. Bounces often happen after a sharp move into the level, sometimes with a small fake breakout. That quick shakeout can trap traders on the wrong side and give us a clean entry in the opposite direction, especially if the level lines up either round number or a previous reaction zone. The concept is simple. When a breakout doesn't happen, a bounce does. And here's the key point. This strategy happens more often than breakouts. As you can see in our trading copilot, Takert, most reactions from strong levels are bounces, not breakouts. That's why it's so important to understand how to trade them. Bounce setups are also great for beginners. They're more frequent, easier to spot, and provide safer conditions to practice your trading skills. You can take short moves or longer ones, depending on the trend. If the bounce is with the trend, you can often hold the trade longer. But if you're trading against the trend, it's usually best to grab a quick impulse and exit. For example, if the market is trending up and the price bounces off support, that's a move worth holding. But if the price bounces down off resistance while the trend is still pushing upward, then it's smarter to take your profit quickly and step aside. So, reading the trend and recognizing the bounce direction helps you decide whether to hold the trade or close it fast. That's how bounce setups work. Simple, frequent, and a great foundation for consistent scalping. The next strategy is also one of the simplest, trading from liquidity walls. While breakout setups can be tricky, they don't always happen and can take time to develop. Trading from liquidity walls is fast, clear, and ideal for scalping. So, what exactly is a liquidity wall? It's a large limit order placed in the order book that stops the price from moving further. When the market reaches that area, it often bounces, because there isn't enough momentum to absorb that large order. For example, if most orders in the book are small, like 1, 2, or 3 units, and suddenly there's one sitting at 150 units, that creates a wall. The price hits it and usually pulls back. That's the bounce we're looking to trade. If the wall is tested once or twice and holds, it's a valid setup. But if the wall is being eaten away or absorbed after several attempts, we avoid the trade. This kind of setup used to be found manually by watching the order book all day, but now it's much easier. In our Takert Trading Copilot, there's a section called Walls that automatically scans for major liquidity walls across different coins. You don't need to dig through order books. Just open the tool, see the strongest walls, and decide where to act. To trade this strategy, you look for a wall that is large, located near a round number, and has been sitting there for a while. Then you enter a bounce trade from it, aiming to catch the reaction. It's fast, clean, and one of the most straightforward scalping setups for beginners. If the wall starts to move or disappears, it can also trigger a strong impulse, which might create additional trade opportunities. But for beginners, it's best to stick to bounce entries only. Liquidity walls shape the market. Learn to spot them and use them to your advantage. If you want a full breakdown of these strategies with step-by-step explanations and real trade examples, check out our scalping course, Impulse Hunter. The link is in the description. The 3 strategies we covered here are a great starting point. They give you a clear idea of what to focus on. Pick one, practice it, stick to it. Bounces, especially from horizontal levels and liquidity walls, are the most beginner-friendly. That doesn't mean they're less profitable. Some traders do really well with breakouts, but bounces give you more control and tighter stop losses, especially when trading off liquidity walls. Your risk stays low, and your reward can still be strong. But here's the key. None of it works without discipline. Once you choose a strategy, don't jump around. Stick to it. Build consistency. If you're trading bounces, focus only on bounces. That's how you learn, improve, and grow. Because if you're trading everything at once, you'll never know what needs fixing. But if you stick to one setup, you'll see clearly, my entry was too early, my stop was too tight, this level didn't hold, and then you can adjust. That's how real progress happens. So use these tools, study the charts, and keep practicing. A link to our Takert Trading Copilot and the Impulse Hunter course is in the video description. Thanks for watching, and if this video helped, give it a like, subscribe to the channel, and check out the other videos to keep leveling up your trading game.